Oh, well, that was a lot of talk from three very interesting perspectives that have been given. One of the things that I always find when we talk about housing finance is that we go straight into the technical issues. And in the process, sometimes we lose people about what really is at stake. And so over the past couple of days, I turn on the television, I turn on the radio, I look at whatever news blog, and Donald Sterling keeps coming up, right? It's all about the LA Clippers, and there have been meetings, and leaders are now going and they're meeting with the NBA. People are talking about it on the radios. And the idea that a gentleman would say, don't bring black people to my games. And it occurred to me that there are roughly 500 players in the NBA, probably something a little bit lower than that, that we're all talking about. At the end of the day, their median income is actually quite nice, right? It puts them at the top of the income profile in the United States. There's a conversation going on right now in Washington, D.C. around housing that says, don't let brown people buy homes. And there's not one radio station talking about it. There's not one national news program talking about it. As an advocate and a lobbyist, we always go to talk to politicians on Capitol Hill. I can't tell you that I get all that much interest outside of people in the Senate Banking Committee to talk about this issue. I wanted to explain it to you that way because it is even more problematic than talking about not bringing black people to games. We're talking about not letting brown people have access to wealth. Let me give another point about this because I know that the title of this conference is Closing the Racial Wealth Gap. Outside of the top 20% of wealthiest individuals in the United States, for everybody who falls below that, 88%, that 80% below that, 66% of their wealth comes from the equity in their homes. 66%. So if you want to talk about closing the racial wealth gap, then you want to talk about ways to generate home ownership opportunities for minorities. So if the conversation in Washington is whether or not we should let brown people be home owners, the conversation in Washington is whether or not we should close the door to minorities being able to generate wealth, right? So that brings me to Ed's PowerPoint presentation and the notion that there is a great deal of risk in this profile. And the thing that I have to say is I had an opportunity to look at your presentation online before, and it struck me because you were looking at a 2007 profile and you were talking about the default rates within this mortgage construct, and you were looking at the credit scores, and yet the very statistics that you were citing ignore some really key points. So for example, if you're talking about risk for Fannie Mae and Freddie Mac, you know that the most problematic portfolio for Fannie and Freddie was their Alt-A portfolio. It had an average credit score of 709. 709, right? It had a loan-to-value ratio that was less than 80% by and large. So it cannot be that credit scores alone determine the amount of mortgage credit risk that's going on in the United States. And there's another reason why I want to bring out this point. Because even though right now we have credit scores that are super, super high, and yet everybody has to have over 700, the reality has been that the vast majority of Americans who have entered into the home purchase market, particularly first-time buyers, have always fallen below that. And so conventional mortgage credit, and conventional, by the way, means safe mortgage credit, the credit score has always been somewhere below 650. 630, 640, something like that. So then it strikes me, well, that's the conventional rates that were issued by the Federal Reserve, and this timeline for that analysis is between 1992 up into 2012. So I say that to say that the conventional loan credit box, Ed, which I think we can agree on this, has always ranged somewhere between 630 and above, all right? At any rate, I go on to say this one point. Most people have been able to get access to credit when they have been in the 600 credit score range. So it strikes me then that if we now say that we don't want individuals with 600 credit scores to actually, or 630, excuse me, 630 and above credit scores, to have access to credit, access to mortgage credit and conventional mortgage credit.
Did I say that?
Well, give me a chance to finish that. Give me a chance to finish what I'm saying.
Something I didn't say, please.
Okay.
Oh, this is her presentation time, so please continue.
It strikes me that if we're making the argument that that has an exceptional amount of risk, which is more reflective, I guess, Ed, of what you said, then we're ignoring the fact that that has been a risk that we have allowed the private market and the government market to bear for many, many years, when the prime recipients of that, bearing that risk, were white Americans. And now that the thought is that minorities might have to benefit from a government guarantee in a heavily subsidized housing industry, which has always been the case, it somehow becomes controversial. That ought to be problematic for anybody who cares about racial equality in the United States. I want to suggest to you, and I'm not a fan of actually going on and on and on and talking, so I just want to make these, I guess, 2 points. I want to suggest to you that in many ways the argument around the riskiness of mortgages should in fact be an argument about the predatory nature of financial institutions and the way in which they have issued mortgages to people of color. It's not the fact that the credit score was 660, it's the fact that you charged 200 basis points more on the loan. It's not the fact that the credit score was 660, it's the fact that you made it adjustable mortgage that had an arm that swung immediately at the most inopportune time during the economic recession. That's the problem. So what we need is a regulator and a regulatory environment that requires those problems to disappear. What we need is an environment in which we make sure that all individuals, and particularly traditionally underserved communities, have access to responsible mortgage credit. And what does that look like? Yes, that looks like a government guarantee, but it also looks like an opportunity to have flexibility with respect to down payment requirements, have flexibility with respect to debt-to-income ratios when there are other compensating factors that demonstrate that you, in fact, have a responsible homeowner. The last point that I will make is, how does this all tie into the proposals that are currently before Congress? One, obviously Jim described, says that there should be no government guarantee at all. And he's right. That takes us back to before the Great Depression. So we already know how well that worked out. But I want to point out some problems about the second proposal as well. This is a proposal that says, you know what? We will give you access to the government guarantee, but you don't have to guarantee that you would serve the full scope of creditworthy borrowers in the United States. If you want to cherry pick and only do 720 credit scores, that's okay with us. That should not be okay with anybody in this room. It's not okay to say we don't want to let brown people become homeowners. We have to find a solution that ensures that they, in fact, can not only be homeowners, but that, in fact, the system is targeting them because they will be the majority of the population that will need to become homeowners if the United States is going to maintain a strong economy in the future. Thank you.